All right, listen up. You're an adult, you've got a paycheck, and you're wondering, how do I grow my money without screwing it up? I'll tell you how. By investing in the stock market, and specifically the S&P 500. This isn't some get-rich-quick scheme. It's about playing the long game and building real wealth. Stick with me for the next few minutes and I'll break it down for you in a way that actually makes sense. Let's go. First off, why the S&P 500? It's simple. The S&P 500 tracks the 500 biggest, baddest companies in the US economy. Companies like Apple, Microsoft, Amazon, Tesla. These are the companies that dominate their industries and drive innovation. And since its inception, the S&P 500 has done one thing consistently: hit new highs over time. Sure, there are crashes and corrections, but if you zoom out, the trend is always up. Why? Because the best companies adapt, grow, and replace the ones that don't. It's like a championship team, always keeping the best players on the court. Now, let's talk about the magic of compound growth. Warren Buffett, the GOAT of investing, calls it the eighth wonder of the world. Here's the deal. When you invest in the S&P 500, your returns don't just grow, they grow on top of previous returns. Let me give you an example. Say you invest $300 a month for 10 years. Historically, the S&P 500 has returned about 10% annually. After 10 years, that $300 a month turns into about $57,000. But here's the kicker. If you keep going for 30 years, that grows to over $600,000. Start early, and time becomes your greatest ally. Dollar cost averaging and emotional resilience. Dollar cost averaging is a simple but powerful strategy. You invest the same amount every month, no matter what's happening in the market. When prices are low, you buy more shares. When prices are high, you buy less. This smooths out your cost and keeps you consistent. Plus, it helps you stay calm during market dips. Instead of panicking, you'll see downturns as opportunities to buy at a discount. That's how you build emotional resilience as an investor. Let's take the 2008 financial crisis as an example. The market tanked and everyone was scared. But if you had stuck to dollar cost averaging, you'd have bought shares at rock-bottom prices. Fast forward a few years, and those investments would have grown significantly. Dollar cost averaging flips fear into opportunity. Diversification and global growth. The S&P 500 isn't just about the US economy. It's tied to the global economy. Many of these companies, like Apple and Microsoft, make a huge chunk of their money overseas. So when you invest in the S&P 500, you're not just betting on America, you're betting on the world. And here's the best part. You're instantly diversified. You're not putting all your eggs in one basket. You're spreading your money across 500 of the biggest, most successful companies in the world. And the index automatically updates to include the best performing companies, so you're always investing in winners. Low costs and tax advantages. Here's another reason I love the S&P 500. It's cheap. Index funds and ETFs that track the S&P 500 have some of the lowest fees in the game, sometimes as low as 0.03%. Compare that to actively managed funds, where you're paying 1% or more. Over decades, those savings add up big time. And if you hold your investments for the long term, you can avoid short-term capital gains taxes in many jurisdictions. That's more money staying in your pocket, where it belongs. The role of the US dollar and quantitative easing. The US dollar is the global reserve currency. Why? Because the US economy is large, stable, and reliable. Countries around the world trade in dollars and hold dollars in their reserves. This brings foreign investment into US markets, including the S&P 500. And then there's quantitative easing, when the Federal Reserve pumps money into the economy by buying bonds. This increases liquidity, making it easier for businesses to grow and stock prices to rise. It's not the only reason the S&P 500 grows, but it's a big factor. Why the US stock market dominates. The US stock exchanges, the NYSE and NASDAQ, are the biggest in the world, by volume, by value, by influence. The best companies want to list here because it gives them access to the most investors and the most capital. When you invest in the S&P 500, you're investing in the companies that are shaping the future, not just in the US, but globally. The long game and discipline. Here's the bottom line. Investing in the S&P 500 is about playing the long game. It builds discipline, consistency, and patience. Automating your investments takes emotion out of the equation and builds a habit of saving and investing consistently. As Warren Buffett says, the stock market is a device for transferring money from the impatient to the patient. So be patient, stick with it, and let time do the heavy lifting. All right, that's the playbook. Start investing in the S&P 500, stay consistent, and let it grow. If you want to dive deeper, check out our next video, where we compare different S&P 500 index funds to help you pick the right one. Remember, it's not about timing the market, it's about time in the market. Start today, and your future self will thank you. Hit that subscribe button, turn on notifications, and I'll see you in the next video. Until then, keep hustling and play the long game.